in that if everything is working, and then we are live to make sure. Give me 2 seconds. I think it's taking a little bit off. If anybody's on, please let me know that you're on. And give me a comment, thumbs up. Just checking quickly. Hello, everyone. This is Yoftahe Gebru. Oh, good. We are on. Okay, let me introduce myself again. This is Yoftahe Mulatu Gebru from the Gebru Show from Boston, Massachusetts. So once again, I want to say welcome to all of you. And I see some people are already in. Mahadir, Danny, welcome. Thank you for joining us. So I've been presenting regarding COVID-19, the psychological impact of it. I brought you different guests, the stimulus check. We've talked about how COVID is going to impact everyone, pretty much like I said, from medical, financial, and home. And today what I wanted to do, because we all unfortunately forced into a situation, a lot of people have lost their job and they are being forced to use cash on hand or savings or resort to using credit cards. And not only because we and most people who can't even use cash because we are on lockdown and a lot of stores are closed, so we're restoring and going into Amazon or any other website that we can end up being forced to use our credit card. So this is a time to talk about how do we use our credit cards smartly, because we don't want to get into another problem by just by using more credit card loans and then end up at the end of COVID like we don't know what to handle or how to handle our financial. So today I have brought you Chelsea Lee. She's an executive credit analyst and my business partner too. So we are very happy to talk to you today what or how kind of impact that COVID or how you can negotiate your credit card. So Chelsea, if you can introduce yourself briefly, what do you do? And then we will go into the questions.
Perfect. Well, thank you so much for just all that you're doing, Adam. I just wanted to really quick just honor you because I think it's incredible what you're doing for the community, and I'm so I just felt super honored to be able to be asked on your show because I think it's you're bringing tremendous value to the marketplace and to the community. So I really do appreciate you for doing that because a lot of people are not doing that right now. So I do appreciate you bringing that positive influence into everything that's going on. So thank you. But yes, so everyone, my name is Chelsea Lee. I am an executive credit analyst with my firm, and so I've been in the industry a bit for 4 years now. So I really do love what I do. I'm passionate about helping people, educating them on their credit, and so I'm actually based out in the Dallas, Texas area. So if my Texas people could let me know you're here, let me know. But my office is out in the Texas area, Dallas, Texas area as well. And so, but I also work nationwide. So I have clients from all over the place, California, New York, Georgia, Boston, everywhere, you name it. Okay, not just Texas. So I do work nationwide. And so what my firm and I do is we help our clients not only just restore their credit, but rebuild their credit. I also coach my clients so that obviously credit is not going to be an issue for them again moving forward in the future. And so I do have my firm and I, we have a custom 6-month program that is attorney backed. The program is designed to help our clients reach or meet their goals, whatever that is. And overall, just help them get their buying power back. So that could be to purchase a home, to refinance, to buy a vehicle, or just to overall not get denied anymore for a credit card because they need it. And so I have clients anywhere that it's not just clients that are dealing with bad credit. I have clients that are maybe 20 points shy of getting into a new interest bracket. I have clients that are maybe trying to get a better job and need their credit fixed because they're trying to get hired for a certain position. So I have clients ranging from all over the place, but that's a little bit about what I do.
Thank you very much, Chelsea. So we're gonna dived in today. We're going to try to understand, to explain everyone what is a credit, where do you have to position yourself during this time in order to come ahead, so make like a smart decision. But I'm sure a lot of questions right now is, because of COVID, are there any relief options for for people who have credit cards, mortgage loans? What are the relief options that are associated because of COVID?
So there's actually a lot of relief options, which is awesome to me. That the banks, whoever you're borrowing from right now, they are going to be willing to work with you. You just have to pick up the phone simply and ask. So it obviously depends on who you're banking with. But I know with credit cards right now, you can call them, see if there's some kind of deferment plan, see if there's some way to defer maybe the interest payments on the credit card, maybe not making a payment for maybe the next 90 days and putting that towards the end of the 90-day payment without any interest. I know that's the same thing for auto loans right now. Whoever you're borrowing from when it comes to dealing with your car, you can call them as well, see if they're willing to defer the car payment for you. Mortgage, same thing, call the lender, see what options are out there. There's also, if you're renting, leasing right now, same thing. There is different options. It's going to come down to obviously who you're borrowing from. But my biggest thing is, if you do get any deferments, if you get any qualify for any deferments to be put towards the end of the loan with interest-free payment, then make sure that you guys are just getting everything in writing, because that is super, super important. Because after the end of 90 days, obviously you do have to pay them. So make sure you get that in writing, is the only thing I would say about that. But yes, there is options. You just have to literally pick up the phone and see what they are. Okay, but they are offering stuff to help.
Thank you, Chelsea. Just like Chelsea said, please make sure to get everything in writing. Otherwise, sometimes it's going to be tricky to try to prove whatever conversation you had over the phone. Get it in writing. And we cannot promise you that every bank is going to give you certain kind of relief, but they all have been able to say that we are able to work with all consumers. So please make sure to call and ask. And at the end of the show, I'll be posting what each credit card companies have promised so far, what they can do, if it's going to be waiving their interest, annual fees, anything like that. So I'll post that at the end of the show. So with that, Chelsea, let's go on a little bit briefly, because sometimes when we talk about credit or scores, there is a different terminologies that do come up. If briefly you can describe what is a bankruptcy, what is debt consolidation, and what are credit repair or restoration.
Okay. So bankruptcy, just so everyone knows, a lot of people know this. There is a chapter 13, there's a chapter 7. So pretty much what this is someone, a consumer, going in to file legally that they cannot pay their debt anymore. Maybe they're in a position where, they're about to lose their home, could potentially lose their vehicles, or maybe a business. And so in that situation, they would go file legally that they cannot pay the debt, so that they can be protected, their assets can be protected. So that's a little bit about what bankruptcy is. There's a little bit of a difference, obviously, between a Chapter 7, Chapter 13, how this impacts the score. I'll be honest with you guys, I am not a bankruptcy attorney, so I don't know all the intricate parts of that, obviously, but I know how this will impact the credit. With a debt consolidation, this is the consolidation of your debt. So let's say you have a lot of items on your credit report that maybe you're starting to get behind on, and you go and hire a company that is going to consolidate that for you. What they do is they let you literally have all of those items, all of those creditors that you're borrowing from, they will let you go in and literally just continue to let them go late, and go into a charge-off status or a collection status, and then they will go in to settle your debt for you. So that is a huge destruction to your credit. It impacts you in so many different ways. So that is debt consolidation. Credit restoration is what I do. And so credit restoration, the point of that is obviously to restore your credit. It is getting the inaccurate, erroneous items on your credit report removed, the negative debt removed. without hurting your credit score. And also along with obviously going through a credit repair process, also rebuilding positive lines of credit as well. So that's the three different things.
Thank you, Chelsea. Just want to point out quickly for our viewers, Mahader is online. He's going to be moderating. If you have any questions, please write it down on the comments. And also, please go ahead and share and tag or tell us where you're watching from so that we can thank you later on. So moving on, of course, we're talking about credit. So some people may understand it, may have a better understanding. So what is a credit score?
Okay, so a credit score. So there is a credit score is pretty much the score ranging from anywhere from 300 to 850 points, right? And so this range is dictated by exactly what's going on with your credit report, your credit history. So it could be your payment history, your amounts owed. It could be negative information that's on the report, positive information that's on the report, but it's all calculated to give you a certain score. There is, obviously a bad score, there's an average score, and then there's that perfect score that everyone wants. But that's just a little bit about what the score actually is.
Okay. On that, what is a credit report?
So a credit report is literally your history of anyone that you've ever borrowed from, anyone that that you have taken out some kind of loan for. So a credit report is going to show exactly your history. So credit card history, it'll show loan history. It's pretty much just literally a history of every single person you've ever borrowed from. It could be student loans on there too. It tells you literally your whole life story. And it gives an idea for the lender of all what's happened. Are you a good fit to borrow from another lender? But that's kind of what the credit report is. It's just history of your whole life of who you borrowed from and how you've paid them.
Thank you. One thing I want to point out, some people think like we get to look at credit reports only, let's say we're trying to buy something, but nowadays employers also are looking at your credit report to make sure that what you have been doing and how you manage. Not only that, but credit report has a lot of information about us on it. Yeah. So it's always going to be good to make sure to check on them if there are any errors, because some people may get a hold of our social security card and may have opened a credit card under our name. Yeah. So how do I avoid scammers? And then there are places that we can get our credit report. There are like the 3 places or the bank, some for free, and sometimes we may have to pay for it. So where can we get our credit report?
So where you can get it, and just to touch on what you just said too, yeah, on that credit report, it is going to avoid scammers and all of that. It is going to list out all of your AKA information, your employer history, the inquiries. So if you ever see that you are having tons of inquiries that you've never applied for on your credit report, that could be a red flag that could be maybe fraud. So anything like that is something to monitor. So to monitor that and to have a site, I think it's very important to make sure that everyone monitors their credit. You can get your credit report, obviously, annually, the free annual credit reports from Equifax, TransUnion, Experian, which are free reports. You can also, I personally use Identity IQ, which is a consumer site, so it's not a hard pull on your credit, but it monitors everything, makes sure nothing fraudulent is going on. It keeps you up to date if there's anything new that pops up on your report. Anything like that keeps track of pretty much your balances. It alerts you if maybe your balances on your credit card are too high. So I always recommend Identity IQ. There is so many others, Experian.com, Credit Check Total, Privacy Guard. There's a lot of consumer sites out there. So I highly suggest that you get one of those. I believe they're like maybe $14, $20 maybe a month, just to continue to monitor your credit. It's going to give you all 3 bureaus and then also your scores. So you're going to be able to see where you're at.
Thank you. So just like it's always good to monitor our credit report, because we just don't know. A lot of people, scammers, I'm going to call them online thieves, that could get a hold of our digital records, end up having another credit card under our name. So it's always good to do that. So if we can get back to it, so we always talk about good credit, bad credit. Before we get that, lenders, bank, they have a way to do what's called a computer generated credit score or manual underwriting. So what are the differences about those two?
So for example, I can give you guys, if you are, let's say you're going to apply for a home, okay, because this is the biggest one where you're going to see this. There is a computerized underwriting process, which most lenders are going to use, okay, because it's just a little bit easier. The computer system knows what to look for. It's programmed literally to figure out if you're going to be able to repay a loan, if you're going to be able to pay it on time. And so it knows what to look for. So most lenders will use this. With a manual underwriting process, this is a lender literally manually going in on a credit report, deciding if you're a good fit or not, okay? And so with manual underwriting, obviously, if that is an option, sometimes this could be a good or bad thing, and I'll kind of let you know why. So with manual underwriting, you want to make sure that someone is very experienced in this, because you're literally having this person dictate whether you're going to get a loan or not, whether you're going to get approved or not. And so this is one lender deciding that for you. With manual underwriting as well, something to note is that typically you're going to be scrutinized a little bit more versus the computer, because they're going to be asking for more documentation, maybe more proofs of income, maybe other documents that might be not as necessary versus the computer, because they're trying to decide whether your credit is worthy enough for you to borrow from them, your income's worthy enough to borrow from them. So sometimes that will be more information that you're having to give over. But manual underwriting is very rare. So if it is done, just so everyone knows, for the community, make sure that you have someone that's very experienced in it, and that it's going to be in your best interest. So a little bit of a difference.
So with manual underwriting, they're still going to check your score, isn't it? They're still going to go through your credit report. Does it affect your credit score? Every time that they pull, I know whenever we pull a credit score, it does affect points.
Yes.
What about manual underwriting? Does it affect our points?
Yes. It is still a hard pull, because they are literally pulling your credit. So anytime that a lender pulls your credit, and that could be not just a loan officer, that could be someone at a dealership pulling your credit. It could be at a bank, any kind of lender like that pulling your credit will be a hard pull. Yes, and if you are doing the manual underwriting process and someone is looking at your credit and assessing that, yeah, you are borrowing money, so they have to assess that. So yes, it is still considered a hard pull, and the score is still going to dictate whether or not, obviously also the verbiage on the report, but it will dictate whether or not you are worthy enough to get that loan.
Thank you. You just mentioned about a hard pull. So there is another kind of pull that comes out that doesn't really affect your credit points. Is that, yes. Which one is that?
So there is the hard pull, typically is going to be 2 to 3 points. And this is when a creditor or a lender pulls your report. And that could also be you with the inquiries. If someone is going to inquire about getting a credit card, that's going to be considered a hard pull. So you will see that on your report about 2 to 3 years, okay? And it will cost you about 2 to 3 points. There is a soft pull, which is consumer sites, which is why it's just best to monitor your credit in that way. So that consumer site is not a hard pull at all. They actually do not pull your credit, even though you get to review your credit history and all that. It's very, very soft, so it doesn't even reflect on your credit report. But any inquiry will be a hard pull, and that's when it comes on the report, and it will cost you the 2 to 3 points and last on your report 2 to 3 years.
Thank you. So just like Chelsea said, make an understanding like between the soft and the hard pull, what's going to affect your points. So with that, I think we can go on to the next one. how are credit scores calculated?
Okay, so this is a very good question. And this is a big thing to look at, okay? If you're trying to figure out why is my score so low or why is my score so high, this is amazing, right? So different ways, and I'll go based off of a FICO scoring, how they calculate everything. And just so everyone know, with FICO, this is just a software. This has been around forever and ever, from the Fair Isaac Corporation. And so this score is typically that number that you're going to see from the 300 to 850. FICO score is also going to be most likely what your lender is going to be pulling from you. Okay, and so this is going to indicate obviously the capability or the repayment that you're going to be able to do with the loan that you're borrowing from. And so obviously the higher number that your score is, the lower the risk that you are. But what's calculated into that, the big chunk of this is going to be your payment history. That dictates already 35% of your credit score, okay? 30% is going to be about amounts owed. So that's why it's important with credit cards that they are not maxed out. Loans that are upside down, this will affect your credit score if that is not managed well, because that's also a huge chunk. That's 30%. Length of your credit history is also factored into your score. So good long payment history, it really does help. And then obviously these smaller ones, like having a good mix of credit. A mix of credits like having installments, credit cards, which is revolving credit. Mortgage is a good mix in there when everyone gets a home. And then obviously 10% of your score is new credit. That's factored into that score. So new credit is, maybe you're applying for a new card or whatever, or maybe a new loan that'll help out the score a little bit too, because that just shows everyone that someone is still willing to give you money. So.
Yes. Yeah, then I think you mentioned also, and then the last one I think is about 10% will be the credit inquiries, is it?
New credit, yes.
Yep. Okay, so that's good. With all, I know you said 35% will be the payment history.
Yeah.
Question that comes up with that sometimes, like when people have credit cards and want to close it, is it recommended to close every single credit card we have on hand, or what is the best way to build a good credit?
So this is a very tricky question, because a lot of people do not know this or do not understand this part, because like I said, 35% of your score is dictated by the payment history, okay? So let's say that you have a credit card that you've established, will kind of be small with a time frame, maybe 2 to 3 years, and you have continuous positive payment history. Everything looks perfect, never missed a late payment, and you have a small balance, and then all of a sudden you close that card because maybe you are thinking to yourself, oh, I have too many credit cards, or I don't really use this one anymore, so I'm just going to close it. Not knowing that when you go to close this, it's going to completely close out the account, okay? And then it's going to close out that payment history that was reporting for 2 to 3 years, and now it's as if it never happened. So because 35% of your score is dictated by payment history, when you close that, you will see your score drop. And sometimes it could be very significant depending on how high your score is. So that's something you want to avoid if at all possible. I always suggest if a client maybe has a credit card that they were just going crazy applying for stuff, and maybe it's been like within a 3 to 6 month time frame, less than a year, that's okay to go in and close it, because you haven't really established so much of that payment history. But if you get past that year mark, it is not smart to start closing accounts like that. That's just going to drop your score every single time. And then what was the second question, Adam?
I think I'll come back to it. I think so. With that, I think you mentioned earlier about FICO, and then what will be the difference between FICO, Vantage scoring, and also is Beacon score the same thing as Vantage scoring, or is it another one for Beacon score? Someone is asking about Beacon score.
Okay, I might not be 100% on this, but I believe Beacon is a branch under Vantage. I want to say it is a score. But the difference between these two is, first off, FICO, like I was saying, is that Fair Isaac Corporation. that was developed obviously for the 300 to 850 score range. So this has been around for a very long time. The Vantage scoring, so the two differences between this is that Vantage is mostly based off of consumer. And so what this is it's a consumer credit score model that was literally developed by the three bureaus. So Experian, Equifax, TransUnion came together. They developed the Vantage scoring, which is what you're going to see with Credit Karma. It's what you're going to see with most consumer sites. You will see that the Vantage scoring come into play, okay? Because it's more towards the consumer. The way that they are calculated, the algorithms are different as far as what's dictated for your score. So sometimes, well, actually I say sometimes, a lot of the times your Vantage score is going to be much higher than your FICO, which is crazy. And a lot of people are like, but you know, they look at Credit Karma. I have a 700 credit score. What are you talking about? And then the lender tells them, actually, you're at a 600. So, and a lot of people try to figure out why is that happening? But because of the algorithms are very much different. So, like on a Vantage, your score is 40% versus 30%. Okay, so 40% of your score on a Vantage scoring model is going to be payment history. So that's a much bigger chunk, that extra 5%. 20% is your utilization of your credit cards or any revolving account. And then obviously 21% is that depth of credit. They have a bigger, a smaller percentage for certain things that actually matter on FICO, and then a much longer on the credit history. So sometimes you're going to see that huge difference, the Vantage versus FICO scoring. So it's important to always keep in mind the FICO is what most lenders are going to pull. If you have a lender that pulls Vantage, that is great. But that's just to keep in mind your FICO is what to monitor.
Thank you on that. I think I'm glad you mentioned about Credit Karma, because I think sometimes I feel like Credit Karma is a feel-good report,
yes,
because a lot of lenders don't really use it. Yeah. And then, but there's a lot of advertisement that comes up online, and then a lot of people use it, and then we confuse which one. So each bank is going to use their own reporting anyway, but FICO has been the most that has been used. So I mean, the other three credit reporters, but we will talk a little bit more about those. But Credit Karma, it's a feel-good report, I think. We'll go to the next one, but let me answer quickly. There was a question that came up. I am new to the USA. I wanted to know how I could build a good credit score.
Oh, that's awesome. Well, congratulations. First off, that's amazing. The best way to start building your credit score right away, I would say, is maybe getting a credit card. So this is going to be a little bit tricky, because sometimes if you don't have any credit, this could be a little bit tricky as far as you getting qualified, because it's almost as bad as if you had bad credit. Okay, because you have no history yet. I would suggest, if you know anyone, a good friend that you trust, or maybe a family member that you could be an authorized user on, maybe get a small loan, a small installment loan through a credit union, to let them know, I want to establish my credit, I want to start building my credit. So doing something very small like that. Then second thing I would say is getting a credit card. And then just managing it very well, keeping a very low balance on it, is going to help you start establishing that positive payment history. And because you have no credit, actually, it's a very good thing, I would say, because you are in a position now, as long as you do everything within a good 6 to 8 months, I would say, of just, looking to build, you could be in like 700 range, within a year, because of doing that. So it's a good thing. It's a bad thing sometimes, obviously, because you gotta show that you're capable of handling a loan. So my suggestion is go to a credit union and try to get a very small loan, or get on an authorized user account, and then move forward with a credit card. And I think we're gonna get into how to manage your credit cards here in a little bit. So I will go over that here shortly.
Actually, why don't we go in there? Because some people think by doing by using a credit card and then paying it off all the way to zero every single month, they think they are doing or building a good credit. but most of the time it's not recommended. Even if we have to leave $5 on it, it's a better way to build credit. So if you can explain a little bit, what is the best way to handle a credit card?
Okay, this is like my favorite topic because a lot of people don't know about this. So managing your credit card. So there is a strategic way to manage your credit card the right way to where you continue to build up your score and get into that range of what you want. So I'm going to go over that. But there's also a very poor way to handle your credit cards that could lead to the detriment of your score. Okay, so with your credit cards, this is the best way, no matter what, to manage it. Depending on, let's say we'll say that you got $1,000 credit limit with the card, right? So some people think I will max out, I will use all of my $1,000 on my credit card, but by the end of the month, I will pay it all off. It'll be zero again, right? And then it's fine. I'm fine because I paid it, but that's not how it works. So each creditor, this is my first tip to everybody, each creditor reports a certain day to the bureaus, okay? So Chase, Wells Fargo, Bank of America, the credit union, whoever lender you're borrowing from, there is a certain day of the month that they will report to the bureaus. So let's say that the 10th of the month comes, and let's say I have a Chase credit card with $1,000 limit, right? And I go and charge my card up $1,000, but I don't pay it towards the end of the month. So when the 10th comes, my score is now going to get dinged because I have a maxed out credit card, okay? So the best way to avoid your score getting dinged is, first off, call who you're borrowing from or who you have a credit card with. Ask them, what day do you report to the bureaus? By that day, so if it's the 10th, I want to have my credit card 30% of the limit or less, okay? So 30% is going to, so if 30% is going to be $300, is that right, Adam?
Yeah.
Okay, not the best in math, but $300, okay? I want to have my card around the $300 mark by the 10th of the month, okay? Because what this is going to show is that I'm utilizing my credit card. I have a very small balance, and it shows that I know how to manage my credit card well. So this will actually help me build my score, increase the points on it. Anytime that it is, let's say that you are a person that has to have everything paid down because it bothers you to see a balance, I suggest to those people, because I do have clients like that, like Chelsea, I don't want to keep a balance on there. I want to have a very small balance. Like, what can I do? I tell them, go buy a piece of gum at the store, or maybe go put some gas in the car, $20, and then leave it like that. Then, if that's how you want to leave it like that. $5, that's going to be less than 5% of the utilization. It's very low balance. It's going to also help you build your score, but that is always the best way to manage your credit cards is 30% or less. It's not saying you cannot use your credit card. You can use your credit card, but by that time, like let's say the 10th of the month comes, you want to have it paid down so that you're building your score versus hurting it by having it maxed out every single month.
Thank you. That's a very good answer, because we do have what's called a love and hate relationship with credit cards. Some people really hate them, and some people say, I'm going to use it smartly using the bank money, but there is a way to manage it properly so that you can build your credit. You answered it a little bit, but let me just ask, one of Orion is asking, which is right, most of our community use more cash than really credit cards. Mm-hmm. So what is the advantage? I mean, there are things that we can definitely have to use cash, mm-hmm. But at the same time, it just doesn't help us to build that credit report because nobody really knows, or there is not something that needs to be pulled out. So what is the advantage of using cash versus a credit card? So
cash, first of all, I'm sure everyone has heard this, money talks. Okay, so when you walk into, let's say, for instance, you walk into a dealership and you have a significant amount of money in the bank, which is not typical for most people, I will say, okay? Cash is always going to be king. So the advantage of that is obviously you're going to have more room to negotiate. You're going to have more room to talk and get what you want out of that lender. Even though that kind of sounds bad, but it's really kind of just getting your way because, like I said, money talks at the end of the day. But this is the thing, that's not an option for a lot of people. Most people do not have that liquid cash to just drop. You know what I mean? And so with credit, it's the advantage with having good credit and not having to stress about credit is the fact that you're going to be able to save a lot of money. You can walk into a dealership and not have to deal with putting down a down payment, having a very small car payment, a good interest rate to where you're not like literally financially hurting yourself. So there's good benefits to both. But obviously, if you have that option of having good credit, most people do not want to go drop, $10,000, $15,000, $20,000 out of pocket. I mean, who wants to do that, really? I want to conserve and keep my money, right? So having good credit is just going to help you save that money so that you're not having to come out so much out of pocket.
It's good. I mean, there's a different way, a smart way of using cash. I mean, there are kind of places that, there are some places they don't even take credit cards. So in that case, you may end up being forced cash. But just like Chelsea said, if we have enough cash on hand, it could be good for emergencies, for other things. So it just dropping all $50,000, $20,000 just in one transaction and not having a good cushion for an emergency is not going to be good. So it's just knowing how to balance it, when to use credit and when not to use it, because credit card technically was supposed to be for emergencies, but in a smart way, as long like the way just Chelsea said, we're keeping it under 30% and we're using it and paying off, that we can show a longer term history is going to be much helpful for us. With that, I think I want to slide in a little bit. Whenever we get a credit card, there are different terms that we need to be looking for. Yeah. So what are the things like, the APR, annual fees, different things that to make sure that we received a good credit card. So how do we evaluate what's a good credit card?
First thing I want to make a disclaimer with credit cards. Just keep in mind, you don't want to get credit cards because you want to go crazy and go shopping and get designer bags and designer clothes, right? That's not the purpose of credit cards. The purpose is obviously in case of an emergency, in case of, you don't have cash on you right away to drop. Maybe you need something right then and there. So the purpose of a credit card is to help build your score and also to help establish good credit, and then also to in case of emergencies is the biggest purpose for a credit card, but a lot of times this does get mishandled. When looking for a good credit card, the biggest thing I could tell everyone right now is to avoid retail credit cards, okay? Retail credit cards, there are going to be very high interest rate on there. Typically, there's going to be some sort of outrageous annual fee on there as well that's going to happen. It's better to have a credit card from a bank. Even if that's a small bank, there's credit unions out there you get a credit card from, but like Chase, Wells Fargo, Amex, all these credit cards, the best thing you could do is decide for yourself, what kind of reward options do I want? I use a site called creditcards.com or NerdWallet. I'm sure a lot of people have heard about that, but it kind of will assess for you what is going to be best fit for you and what you want. It'll help you decide the interest rate, the annual fee. If you want to avoid those things, you could filter that out too. So there's 2 different sites I use for my clients to decide what they want. But yeah, I wouldn't say there's like bad credit cards out there, except, obviously the outrageous ones with high interest and like crazy annual fees, and the retail, I just do not suggest that to anybody, but it's going to come down to what the consumer wants. As far as reward options and all of that, and then also their capability of managing it as well, depending on how high of a limit they get.
Okay, so thank you. Like I said, it's just mainly it's not about really the credit card. We know the fine prints, read it, because if they're going to have an annual payment, fees, sometimes we overlook those things. So they may say $100 every single year just to keep a credit card. So make sure to look at all. Anything that's like fine print.
Yes, and I will say I have had clients where they had a credit card that was closed. They thought they had paid it off, but because of an annual fee came into play, they had no idea, were not aware of it. Well, now that $100 that was owed comes on the report, and then that bank had charged it off. So then they're like, I don't even know how this happened. I paid this card. But because of that annual fee that you don't think about, it will come into play. Like, they are going to get their money some way or another. So that's something to be very cautious of. I try my best to avoid annual fee cards because I do not want to mess with that.
That's true. That's true. I think we answered it a little bit, but maybe need a little bit clarification. It says, but wouldn't paying only 30% of your balances still you need to pay the interest on it? So if you can a little bit elaborate on that, please.
Yes. So this is the thing to note. When managing your credit card like that, you want to have that small balance. And this is why. You want to keep that small balance, like I said, because you want to show that you're utilizing your card. And this also shows other lenders when they are looking at your report that you're utilizing the card. And then also you are managing it well, but also it makes the banks happy. And I know this sounds crazy, but it makes the banks happy when they have some kind of interest getting paid to them, if that makes sense, instead of your card always being to zero. Also, this helps, I always recommend my clients getting it to 30% because a lot of the times my clients, when they're trying to rebuild their credit, sometimes those credit cards, because of emergencies came up and they maxed out their card, it's much easier for someone to pay down their card to a 30%. So if they have a $1,000 card, it's almost maxed out. Instead of paying a full $1,000, they can gradually get it down to $300, which is still going to help their credit score. It still keeps a very small balance, but now they're not paying so much debt all at the same time, if that makes sense. So there is it is beneficial to have that small balance on there, but you do not have to keep that 300. Like I said, if you have to keep a $5 balance and it's very small interest on that, that's okay.
Yeah. When we say 30%, we don't mean just leave it at 30%. It could be at 1%, 2% along to show, because whenever we pay off our credit card to zero, the history gets wiped off. So just to show that we are making that payment, even if there's a $1 to $5 charge on it, it would keep it on the credit report. So it's just making sure to keep it, and the interest is going to be very, very low. And then if you're offering, I think one Orion is saying, I use a credit card with zero interest. That's perfect to be able to do that, but sometimes they do it only for a year or not, unless you can negotiate longer terms.
And I will say too, if you are when your credit continues to get better, you can always go back to the creditor with the credit cards that you have and negotiate your interest rate to get it as low as possible. So that is always an option. You are not stuck at the interest rate that you got when you originally applied for the card.
Yeah. With that, I think one thing I want to say, a lot of people have a credit card and then every month they get it and then they just pay. They don't even read what their interest rate is, what they're paying for. So please make sure to read your credit card statement when they come in so that you know what you're paying for and then where it's going. So, but whenever we say 30%, please understand we're saying keep it as low as possible just to show something on your credit report. Ati is asking, if you have bills who are sent to collections, after you paid, how fast does it affect your credit card or does it change your credit score?
If you have a bill that went to collections?
Yes.
Okay, so here's the thing about paying a collection. So this actually, I know this is going to sound really crazy to people. Paying a collection will actually hurt your credit score. So this is what it'll do. It'll help the debt to income, okay, depending on how old that collection is. So let's say this is a few years old, maybe 3-4 years old, right? And you came into some money and you want to go and pay your debts, right? When you go to do that, this is what's going to happen. When you go to, first of all, if you do not get a paid for deletion letter from that collection agency, which is very rare to get, they will zero out that collection. They will leave it on your report, so that verbiage is still there that your account is in collections, right? So if you do not get that paid for deletion letter guaranteeing that they're going to remove it for you, it will stay on the report. What then happens is once that balance is updated to 0, your date of last activity, which is the 7-year mark that a creditor has to is allowed to report on your credit report, now just got updated. So if I had a collection from 2014, I go to pay it in 2020, that collection stays on there, but it's zeroed out. Now that collection looks like a brand new collection on my report because the date of last activity is showing 2020, and now my score just dropped. My debt to income dropped, but now my score just dropped because it looks like I have a new collection. So it's not beneficial to pay old collections. If it is a recent one, that's okay. You could go ahead and take care of that. Obviously, I would never suggest paying the full amount. I would do some kind of settlement on that so that you don't have to pay the full amount, and that would just help that debt to income at that point. But yes, paying old debts or anything like that, it's going to impact the score. And a lot of people do not know that, and they're trying to figure out, but I paid it, so why isn't my score going up? But this is why.
Okay, we'll go to my question, but let me answer one more that came in. Investment like stock online affect my credit score?
Investing?
Yeah, I think like stocks. I think that you do online, does it affect credit scores?
I have never seen that come on the report. As far as, yeah, I have never seen that come on the report, so I would say no.
Okay. So I think like we had a good segue with what you just talked about earlier.
Mm-hmm.
What is it whenever we talk about credit restoration, and what is it like that can be worked on? What kind of deals can we be making? Is it just collection and charge-offs? What items can be worked on my credit report?
So that's a great question, because a lot of people think that it's just collections, it's just charge-offs, but anything negative, erroneous on your credit report can be worked on, okay? So that could be public records. Let's say you had a tax lien, a judgment, a bankruptcy. That can be worked on when going through a credit restoration program. As far as student loans, let's say you have late payments on those, with my firm, we help our clients consolidate their student loans. Once they are transferred to a different account, we will go after the negative late payments, or if a student loan was in collections, anything like that, we'll be able to address too. What else is there? Late payments on accounts. I'll tell you right now, typically if you have a Capital One credit card specifically, or a Capital One account, and you have late payments and that account is active and open, you're not going to be able to address something like that. But yeah, any late payments, I've seen, there's a lot of things I've seen. I'm trying to think what else there is. Collections, charge-offs, bankruptcies, inquiries. If you're dealing with fraudulent inquiries, or anything like that you know that you did not inquire about, those can also be worked on. Your personal information is a big thing. Because a lot of people don't know this, but your AKA information, the names, the addresses, all of that are connected to the accounts that are on your credit report. So that can also be worked on as well. So there's several different things.
Okay. So whenever we talk about restoration, like you talked about earlier about debt restoration, there are a lot of people out there who wants to say, I'm going to help you with your credit score. Let me pay off your debt. How do we avoid scammers? How do we evaluate who to work with? What are the things that we need to watch out for?
So before, and this is a huge part, because sometimes credit repair, it will get a bad rap because of companies and what they do, their taxes that they do. Okay, so first thing to look out for is the biggest thing I would say is, as far as avoiding scammers, if someone is guaranteeing you that you are going to be at a 700 or a 750, if they guarantee you a score, that is something already to be a red flag, okay? Because legally, you cannot guarantee someone's score. There is a law that we have to abide by, the Credit Repair Act.
Yeah.
So anyone that guarantees you a score, that is a huge red flag already. Okay. Second thing is guaranteeing you that 100% of your debt's going to be removed, 100% of your accounts, your negative accounts, are going to be completely removed. Someone telling you that in 30 days we'll be able to take care of this for you. The bureaus and the creditors and collection agencies, they legally have 45 days to respond to you. So if someone is promising you a shorter time frame than that, that's a huge red flag. Okay. I would say also to avoid going to hire somebody, not just like the red flags or the scamming part of it, but actually looking for a program or looking for a company that's really going to help you. My hugest thing is avoid a dispute company at all costs, because this is what I'm going to tell you. Disputes is something you can literally do on your own. You do not need to hire a company to do that, okay? And a lot of people don't know this, but disputes really can affect your score. They can affect your score big time, because like I was saying about that collection, if you go to pay it, well, when you go to dispute on your credit report, let's say, you go to dispute these old debts or old collections and they get removed off the report. Well, a lot of times because there was no proof of debt, proof of validation of that debt, well, now it's getting resold to different collection agencies over and over. Now you have new collections popping up on your report that were maybe a couple years old, 4 years old, and now your score is getting damaged instead of getting better. So that's something to avoid is hiring a dispute company. Because also with that, to note is that they're sending out the same letters over and over and over, and there's nothing happening. So the things to look for, which is what my firm and I do. So I pride myself on working with the best, and so the thing to look out for is an audit. You want to hire someone that's doing audits. Okay, an audit is requesting the proof of debt, requesting the validation of the debt, requesting the proof of documentation that links the consumer to the debt. So it's literally as if the IRS was to go in and audit a taxpayer, right? And then that taxpayer has to provide all these receipts. It's the same thing that my firm and I do, and it's very important, it's very strategic that you find someone like that, that's not sending out the same letters, that you have a custom program to you, that it can guarantee a permanent deletion. That's a huge thing, because you don't want these accounts getting resold. That has an attorney. That's also something that my firm and I do. We have, it is credit restoration, but we are backed by an attorney that specializes in consumer law. So when you go to hire someone, you want to look for an attorney, an audit process. You want to look for someone that's doing custom work on your file and that really knows what they're doing. Okay, because that's huge. Huge before hiring somebody.
Yes.
Really ask those questions.
Yes, especially if you're getting phone calls just to say, I'm going to work on you, send me a check, and then I'm going to be able to go and deal with it. Please do not send any check, because you can just say goodbye to that check anytime.
And that's something to note too. A lot of people will go hire a company, and that company will tell them, well, you have to pay us first before, our full amount before we start work. Or there's companies that will work on one account at a time, and then that process will drag out for over a year. So you don't want something like that. You want a 6-month program, which is also what I have, a 6-month program that's just to get you on track, get you where you need to be, and not somewhere where you're like in that thing forever and ever and there's no end to it and you're paying money for no reason. So huge to look out for.
Thank you, Chelsea. There's another good question that came up. We touched it up a little bit at the beginning, but it's worth it to go back over it, I guess. Okay. I work hard to keep my good credit, but my credit card debts are mounting. When I get my bonus, should I reduce my debts, save the money, or put it in my 401k?
That's a good question. I think if you are in a position to, and like I said, if you can at least work your credit cards to get them at maybe 50% of the limit and just gradually work your way down to that, I think it is worth it. And this is how you decide that. Look at your limits right now and look at your balances. anything that is exceeding past, I would say, 80%, you're getting close to being maxed out. Anything that is past due right now, if you have anything that's in a past due status, or is over the limit, that is the first priority to take care of right away. And I'll tell you why. So anytime you get into a past due status, and we're just going to talk about credit cards, that's already doing all kinds of crazy things to your credit report, okay? Like the score, anything past due, you're going to see your score just drop significantly. So if anything's past due, take care of that first. That's number one priority, and just get it at least below the limit. So if it's $1,000, get it at least to $998, okay, until you can gradually pay it down. If you have a card that is getting close to being maxed out, and let's say you have nothing past due, I would start working that card down first to get it to at least 50%. If you can work it down 50%, then tackle the next one. So it's all about taking it one step at a time, not overwhelming yourself. And then that's something that, I don't mind. Just so everyone knows too on here, if you are dealing with something like that, my consultation is free. I do give free advice because I believe in, obviously helping people, educating people. So that's something I can offer. And if that's something that you feel comfortable with, obviously I could take a look at that for you, tell exactly what to do. I'm more than happy to do that. So if you just reach out to me like that. Or obviously, talking to someone that's educated about credit and knows what they're talking about to help you do that. But I would say those are the priorities. So I would say it is a good idea to go down and pay your credit cards, especially if you pride yourself on your good credit. It just makes sense. So hope that answers that question.
There you go. Now you can get in touch with me, and I'll make sure if you need to talk to her, we will address that as we go. I don't know if we can answer this, but let me just ask it anyway. Is it a good idea to transfer 401k money to a new employer right now, or just wait until the stock markets get stabilized?
That's kind of outside of my whole thing. I'm all about the credit part of everything, so I would get in touch with someone that knows more about that. That's not me.
Yeah, that's what I was going to say, but we can answer that on a different way. You can send me a text, and then I will try to get that answer to you for you. And let me see if we have another question. How can you? That's right. Okay, so let me get back because we are getting close to our show, so that we don't. One thing that I want to say quickly, this is a very difficult time. So a lot of people are using cash, or may not have cash on hand. They lost their job. So credit cards are meant to be for emergencies. But there is a smart way of being able to use it. So there are sometimes people are going to go out and try to do a cash advance or other things with credit card, forgetting the APR is different for regular use versus taking a cash advance. So what is your advice? Should people take a cash advance on their credit card?
That's a good question, because a lot of people don't know that interest rate is a lot different versus you actually using your credit card. So I would say, if you are in a situation where you absolutely had to do that because you just did not have the funds on you, do it. You know what I mean? Because you need that. That's the whole purpose of this, is to have a backup for emergency, right? But obviously, it's not smart if you have the cash or you have the funds to do it. Or let's say you were in a position where you have good credit, and what you could actually do instead of doing that is maybe going to a credit union, which I always suggest a credit union because you're going to get the lowest interest rates. Everyone is typically very nice there, depending on what credit union you go to. But maybe getting a small personal loan. It will come on the report as an installment, but even just having that option of going to a credit union, getting a small unsecured loan or a personal loan, that's probably going to be a better idea for you versus going to take out a huge cash advance on your credit card. So there always is a little bit of a different option. You just have to kind of know your options and just be smart about it. So, if you have the cash, don't take cash out of your credit card. Or, if you absolutely, that's the only result, that's totally fine. But just realize that, yes, you're going to have to pay it back because you technically borrowed, you used that money. And then it's just going to be, obviously a higher interest that you're going to have to pay on that amount that you borrowed. So, yeah.
One more question quickly, and then we can address a little bit.
Okay.
Does it matter? I mean, like, I know some people may have 10 credit cards. What is the maximum you'd recommend? I think you try it's like under 4, I would say. So what would be a recommendation? And then is there an advantage of having Visa, MasterCard, American Express, different kind of credit card versus just having only Visa?
Yes. So that's a really good question. So if you already have 10 credit cards and you're managing them well, you're amazing. Good for you. That's so awesome, because I would be completely overwhelmed. I think my best advice I could give for someone that is building their credit right now, or maybe they don't have any credit cards just yet, start off with 2. Maybe start off with 1 at first, start off with 2, see how you do about managing those. Max, I would say, is having 4. Okay, 4 credit cards is already kind of pushing it, but max, I would say, is do not go over 4, and also do not apply for them all at the same time, because that will affect your score. Applying for so much new credit all at the same time, it's like a red flag, and it puts like everyone on, it makes the creditors like, what is she doing? So it will affect you. So don't apply for too much, but max, I would say 4. Keeping those obviously low. And then the second question was, is there a benefit to having a mix of the creditors?
You should have Visa, MasterCard, American Express. So what would be a good way to have a good score? I mean, a good report, I guess.
Yes. So I would say, so if you already have, 2 Visa cards, 2 MasterCards, that is totally perfect. Like, you're fine. But if you are maybe have like a Discover right now, or a Visa, let's say you have Discover Visa right now, right, that you're utilizing, it would be a good idea to get it maybe an Amex or a MasterCard, throw it in the mix, because what this does is this actually looks really good to the creditors, to the lenders, when they're reviewing your report, because it's showing them that these different banks have trusted you with letting you borrow money from them. So it does look really good when a lender sees that report, that you have that good mix there. It just shows, that you are capable of handling your credit, that banks trust you, and it just looks good on your report overall. But it's not bad if you have 2 Visa cards, 2 Master, or just 2 Visa cards. That's still good as long as you're utilizing your credit cards the right way. So I hope that answers that clearly.
Thank you. As I can say, you can understand, credit card or credit report is not something that we can cover just in an hour. There will be more. Chelsea and I will bring you a little bit more interesting factors on how to handle your financial, maybe once a month or whatever. We will see how the schedule works. So you'll get to see Chelsea more often. But to close it, if there's anything we didn't touch up, as a summary, what are the last words you want to say, Chelsea, to the viewers?
I just want to say to everybody, first off, I'm so excited about this, and I hope that we brought some value to you guys, and thank you for everyone that has tuned in, that will tune in. I really hope that this does help you, so let us know. But also, last thing to just note on everything with credit, just keep in mind, credit, it's something that is going to be relevant forever, for time and time, forever and ever. Okay, it's going to be around for a very, very long time. Let me tell you, last year I went through I went through a lot of medical issues that was like insane, and I did not foresee it. And when that emergency happened, I was very grateful to be able to rely on my good credit. And so when times come like that, when emergency comes, when times like this are happening and the whole COVID crisis, you want to be prepared. And right now is really the time to get a head start, work on your credit right now. And I'll kind of just tell you, I'll try to keep it quick, but the bureaus are understaffed right now, guys. The creditors, the collection agencies, they're understaffed. Like, right now is a great time to work on your credit. Typically, you're going to see times like this where people are understaffed, more deletions than usual. an easy way to work on your credit to get it where you need to be right now. And obviously, when we come out of this crisis, you can come out with your buying power and get ready to buy a home. Right now, the interest rates are very low. You can prepare yourself when this time comes again, because there will be another time, right? If you're not walking out of a crisis, you're walking into one. So there will be another time, right? So why not have less stress in your life and have good credit and work on it now versus waiting on it? So I would just, have that message to everybody. Prepare yourself. Preparation is everything. My dad always tells me, get ready so you don't have to be ready, right?
That's true.
You have to be ready, so that's a huge thing. So I hope that impacts you guys. And if you need help or have questions too, obviously reach out to Adam. You can reach out to me on my Facebook. You could direct message me, but I really do hope that this really answered a lot of questions.
Thank you, Chelsea. Thank you very much for taking your time and being here. And I respect your knowledge, and also I respect you having you as my business partner. And then you'll get to see Chelsea. Some people are already asking for you more. So we will definitely bring Chelsea back and we'll talk more. So as closing, thank you for all of you following and for the questions that you have. Like I said, this is not something that we can cover just in an hour. COVID has brought a lot of stress financially, mental, family-wise. So there are a lot of aspects on our life that is being touched. So we will make sure to address it. So I've talked different aspects of it. The reason I wanted to bring about credit card, a lot of people are now waiting for their stimulus check or out of job. So they are resorting in using credit cards. So I wanted to make sure that you all have a good understanding where to look for your credit report and how to the smart way to use your credit cards. Credit cards are not bad. It's just how we use them that's going to matter. And we need credit cards to build reports. Even simple thing, if you are out of town, you want to rent a car, you need a credit card. Most places that they don't even let you in. So there will be places that we will be forced to have credit card, but we have to make sure to manage our finances properly in a smart way. Once again, I end my show all the time saying, please make sure to take care of each other. This is a very difficult time. Ask for anybody who needs help. If you need to provide food or if you need to provide financial, anything that you can do to help others, please do it. This is a time to help each other. We will come out. This all shall pass. So I want to say thank you for being at the Gebru Show. Once again, Chelsea, thank you for being here. And then we'll have you back again. So everyone else, thank you for watching. And then we'll see you again and bless you all. Thank you.